Welcome to the New York Outlook for Tuesday, the 23rd of January 2024. Quickly glancing at the economic calendar, as you can see, there are no red folded news events, and thus economic news doesn't have any bearing on our trade decisions for today. Then moving swiftly onto the 4-hour chart, what I can quickly recap on is the fact that we've recently had a change in character for the market structure, which essentially means that our confirmed bullish structure is being questioned and the bearish structure is yet to be confirmed. Given the uncertainty in this regard, I've been taking an approach where I require three elements to be able to trade. One being 4HOB backing, two being um, a validated substructure high to serve as a significant target, and then obviously internal range liquidity to trade towards that target. However, upon reviewing my trade plan for today and in paying attention to what's been happening for the session, I realized that there was one element that I was somewhat ignoring, and that element is the fact that once we react to a 4HOB, then trading against that 4HOB is completely invalidated until the point where we can revalidate that there's new IRL to support a particular target. So what I want to do is just illustrate what I mean by that, and what we can see this morning is we came into this 4HOB, right? In terms of the fact that we've reacted to this pro-trend unconfirmed, our actual target for that, for any shorts taken here, would be this substructure. However, we have a barrier situated between this substructure target being this 4HOB. The fact that this 4HOB has been validated by a body break right here makes it a strong OB and one that we shouldn't be trading against. Thus, what I do want to do is illustrate to you how to navigate this scenario, and I'll quickly just remove some of these brush strokes and then we can go from there. So what I mean is, at this exact point when we react to this 4HOB, any short position, so if we were to reach this POI and say okay, it's a valid POI to short from, that would be invalid. And the reason why that would be invalid is the fact that we've got this validated 4HOB, which makes it highly probable that a new leg will be developed to target this OB. So how do we go about trading shorts when we are reacting to a 4HOB? The option we have is that price must develop this primary or secondary leg in this case, right? This secondary leg will develop IRL, with this being the last IRL, and this reaction point, the deepest reaction point to this 4HOB, will serve as the ultimate target right here, right? So what we do need is, given that this is a primary leg, we can then generate a secondary leg right here, and then from that point onwards we can potentially enter right around here, covering our high of the day, which would be our stop loss, and then we'd have a whole bunch of IRL to target for this ultimate target. What you need to keep in mind is the fact that once this develops, we're not directly trading against the 4HOB. We allowed the 4HOB to give us the reaction, then to interpret that reaction to see, okay, is it just building liquidity? And since we're developing the secondary leg reaction from this primary OB, we can say, okay, we've validated that this is more than likely liquidity, and then we can target this. However, again, once we come into the unreacted to area of this 4HOB, then again it means that we need to repeat all of these steps in order to continue shorting deeper into this 4HOB. Because once again, the more likely scenario is that we're going to react to this 4HOB and then develop a new leg and ultimately target that. So that's something I just wanted to make you aware of, but as well as myself, just to remember that under these scenarios, 4HOBs do pose a significant risk for reversal, and thus we stop trading at that point. Then maybe just to quickly move on to the 4-hour to explain what's happened for today. So what we can see is that today in Asia, we actually put in the new high of the day, and we took out the significant substructure. What this means for us is that because the current day has taken out a significant target such as this, then we can't trade longs any longer. This is essentially this note right here. Asia took out the substructure target. Longs are now invalidated, validating shorts. Unfortunately for our shorts, they didn't line up nicely with um, the previous high or low of the day. But maybe just to finish my thoughts on the 4 hours. So essentially we reacted to this pro trend unconfirmed OB right here and right here, validating shorts, and then on the 5 minute you'll see I found this a primary leg to then short from. However, like I said, we had to factor in the point that this 4H OB was validated, and from a technical analysis it does provide a basis for longs. The ultimate target for short trades is indeed this, but like I said, we can't ignore the fact of this 4H OB. So moving on to the 5 minute, what I do want to illustrate here is in terms of my trading plan, once the previous high or low of the day, once the POI that has been created for this new leg is above the previous high or low of the day, it's completely invalidated for me to trade above the previous high of the day, because in those situations, per my data analysis, I found that more often than not what tends to happen is this previous high of the day is actually indication that trading here is more than likely going to be liquidity. So what tends to happen is price comes in and around this area, then gives a reaction, and then uses all of what it's built here as internal range liquidity or liquidity to fuel the move to the upside. Thus, when PA sets up like this, I tend to try and ignore it or avoid it, because I end up becoming the liquidity. Hence why, even though this trade panned out, it wasn't per my trade plan, and I'm happy to set out. Then the other factor for potentially continuing to consider shorts would be this right around here, these POIs. However, at this point we have to consider a couple of points. ADR is still fine. ADR for January is around 75 pips as it stands as of today, but we're trading against a 4H OB with no IRL validated. It doesn't make sense to continue shorting until we have built additional IRL and then reacted to a 15 or 5 minute OB as such, developed a new leg, have IRL to target, and then we've created that triangle, in which case we can continue shorting. However, the likelihood of that happening in New York seems to be quite slim, and it's more likely that we'll take out this significant target. Once we do take out this significant target, then essentially any further short trades are invalidated, and then again, in terms of longs, we cannot trade long because a significant target was taken out. So longs are off the cards for today, and once the substructure target is weak, then shorts are also invalidated for the day, and at that point we'll stop trading. So perhaps to quickly summarize, okay, let's start with longs. Long trades were completely invalidated because of Asia taking out a significant target in the current day, and then in terms of shorts, the first reason for not taking this was because it was above the POI was situated above the previous high of the day, and there was a chance that we'd be used as liquidity. So that short was invalid for me, and then now as we move deeper into this 4H OB, shorts are invalid for the fact that the 4H OB is a barrier that we cannot trade against, which means for the New York session there's potential for us to actually take a short position. However, there's a couple of things to consider. The first being the fact that the London range will need to be liquidated at some point prior to us getting any entries, so it's probably going to take out this low, or I mean, for price to come all the way right here seems a bit ridiculous to then take a short. So it's probably going to take out this substructure, and if that's the case, then obviously shorts are invalidated because another significant target was taken out. Then, yeah, hence why I'm saying it's quite unlikely that a short would present. But if it does, maybe wick this on London Open and then come up, create that IRL, react to a 5-minute OB right there, and then create a secondary leg from these primary OBs. Then we can potentially consider a short. Obviously we'll need fib alignment, which would look something like this. So if we can get an entry right around between the 50 and the 38, that would be good. Given that there's only reasons to short and not long, I'd probably be happy with a stop loss like this and then targeting this. But at this point, the risk reward doesn't make sense at all. And to be honest with you, I think it's probably best to stay out of the markets today, let it reset, and we'll come back tomorrow. So that's pretty much the New York outlook for today. It's a bit of a mixed bag. There's reasons to trade both directions. There is a lot to consider in terms of what we're reacting to, the targets we have reached, and then, even if we take out this substructure, like I'm saying, the chances of price, you know, reaching here again doesn't compute well. So for all of those reasons, I think the New York session is not worth trading for today. Overall, have a good trading session, and we'll chat again for the end of day review.